Let's come back to the analysis of the global stock indices for the week ending of 23rd December. So the Dow Jones Industrial Average for this week shows overall an uptick, but it did see quite a bit of volatility this week. Nevertheless, it is still below the it is showing no sign of recovering from the false breakout over here. So the if anybody is in the shorting the Dow Jones, then it should still be in the trade unless it actually managed to close above the resistance at 33,814. Now over to the Nasdaq Composite Index. Nasdaq is pretty weak. So in fact, it has broken below the support, the short-term support over here. So that means that there's quite a bit of downside over the next few weeks. But I don't see there's a lot of movement for the last week of the year because of the holidays. As for the S&P 500, S&P 500 saw quite a big downturn this week, and but they managed to pull back up a little bit. But if you look at the volume over here, okay, there's not a whole lot of volume, so I don't see a major rebound in the S&P 500. The bear is still in control at this point in time. Um, as for the European side, uh, the French, the French CAC 40, we didn't see any major volume to try and recover from the previous week's big downturn. So at this point in time, again, the bear is still in control overall, unless we can see any major breakthrough above the resistance over at the 6,588 point. Now, if it does closes above that, then what we need to see is that it must be able to break above the previous high in order to confirm that there's a turn in the sentiment. But I don't expect any turn in sentiment anytime soon for the Europe side. FTSE 100, same thing. Okay. Um, okay. The bear is still bear sentiment is still pretty much intact at this point in time, especially when it's at the FTSE 100 is at the pretty near the high. Okay, so very little volume over here, despite this big uptick. I see this is more of the some uh, closing of the short positions over the holiday period. Over in Asia, the let's start with the Hang Seng. Okay, Hang Seng is pretty flat over here. Nothing much to do if you are already in the trade to long the Hang Seng. Okay, um, so hold on tight to the position if as long as your stop loss is set. Okay, if you can, the short term stop loss would be around 16,834 points. Okay. As for the China stock market, SSE, okay, can see that there's some concern about the opening up um, of the COVID situation. Okay, people are worrying about the relaxation of the zero COVID policy. Um, so I think this is just a very short-term sentiment because this is all just temporary. As if people are worried about not opening up, and now they are worrying about opening up, then that is just trivial. Okay, so I see that over the next few weeks, it might just trade in a tight range, uh, af- and then after that, is probably going to go back up again. Okay. In any case, just watch out for this long-term support line over here. Next, let's look at the Nikkei 225. Nikkei 225 is pretty interesting, with major development at the central bank side. Okay, we see a big jump down. Okay, so if you look at it, there is still a continuation of the building of the head and shoulder. Okay, there's be I think in the case of the Nikkei, do remember that after the Chinese New Year, there is also the long break in the Japan side for the New Year, right? So I think there will be a little bit of sideways trading for the Nikkei, but do watch out for the come April where there's going to be a change of guard over at the central bank. Okay. But in any case, with the enlarging of the quantitative easing by the central banker Kuroda, but at the same time, pushing up the 10-year bond to 0.5%, may signify some kind of turning of the central bank policy over the last 10 years, okay, which is probably why the Nikkei 225 is very bullish, seeing a big downtick this week. As for the Korean side, okay, which is a bellwether stock indices for the global economy, okay, you can see that it's still moving downwards. Okay. Um, which also prove my earlier conclusion that bearish sentiment is still in control. Oh, and the last part is the Singapore Straits Times Index. Okay, trading sideways because of the Christmas holiday as well as the New Year. But nevertheless, if you look at it, I think there's not a lot of cheer going to show up in the trades of the STI. So we can see over here. Okay, now, do watch for this downward resistance line. Any breakup above it may signify some a little bit of the bullish sentiment, but I think this would have to come when the Chinese stock market is strengthening. Otherwise, be prepared for a little bit of the sideways trading, or in fact coming down to this support line over here. Okay, so that's all for the week of 23rd December.